Hello and welcome. You're watching World Business Report right here on News 9 Live. I'm Karthik Malhotra, and over the next 30 minutes, all the top stories from around the world that will move the economy and have a bearing on your finances and investments. Stick around on World Business Report. Well, the top story we are tracking today, just today after Iran conducted airstrikes inside the territory of Pakistan, the Pakistan Air Force retaliated by striking militant targets in Iran. According to reports, Pakistani military targeted locations linked to the two militant groups based in Iran's Sistan-Baluchestan province, the Balochistan Liberation Army and the Balochistan Liberation Front. The BLA and BLF are ethnic Baloch separatist groups that seek the independence of Pakistan's Balochistan province. Remember, Pakistan had released a statement on Wednesday announcing a violation of its airspace by Iran, further stating that 2 children were killed and 3 girls were injured following the incident. Tensions building up in Pakistan and Iran, likely to play out. Tensions building between Pakistan and Iran. Remember, Iran had struck Pakistan, and Pakistan releasing a statement saying that its airspace was violated by Iran. Tensions brewing in the Middle East, now spreading out eastwards into Pakistan as well. Of course, this is a developing story, and through the day on News 9 Live, we will keep bringing you updates on what's brewing between Iran and Pakistan. Of the strikes that have taken place, Iran and Pakistan both seem to be embroiled now in some sort of a conflict, and Pakistan retaliating after the airstrikes. Well, Pakistan has targeted both the BLA and the BLF, militant organizations which are based inside the territory of Iran. Iran, of course, had also launched strikes against Pakistan, and all of this really coming in by way of the battle, the conflict rather, in the Middle East now spreading. Of course, we have also seen participation into the battle against the Yemen group, which is supported by Iran, and the involvement of US as well as UK. Well, staying with what is happening, the conflict on in the Middle East, the US government has announced to redesignate Yemen's Houthi rebels as a terrorist organization on Wednesday. Washington's move to relist the group as specially designated global terrorists comes after the US launched strikes on Houthi targets in Yemen in response to the rebels' attacks on vessels in the Red Sea. Here's more.
Houthi fighters in Yemen held a funeral on Wednesday for 4 militants killed in recent U.S. airstrikes. And Washington followed up by relisting the Iranian-backed Houthi militants as a, quote, terrorist group, subjecting the group to harsh sanctions aimed at cutting off funding and weapons the Houthis have used to attack or hijack ships in vital Red Sea shipping lanes. Here's White House National Security Council spokesperson John Kirby.
We took this action because of their continued reckless and indiscriminate attacks on ships transiting the Red Sea and the Gulf of Aden. These attacks are a clear example of terrorism, violation of international law, and a major threat to innocent lives and to global commerce.
A Houthi official on Wednesday called the U.S. designation, quote, blackmail, and condemned what he called American and British aggression against Yemen. Attacks by the Iran-allied Houthi militia on ships in the region since November have slowed trade and alarmed major powers. The Houthis say they are acting in solidarity with Palestinians. The attacks target a route that accounts for about 15% of the world's shipping traffic and acts as a vital conduit between Europe and Asia. Speaking at the World Economic Forum in Davos, Switzerland on Wednesday, the Iranian foreign minister said the safety of navigation in the Red Sea was tied to the situation in Gaza. Kirby dismissed that claim.
The whole argument that this is about the war in Gaza, I mean, they're just driving the stake through a straw man. There's nothing there.
The involvement of the American military has further raised fears of a wider regional conflagration, as Iran fired rockets into neighboring Iraq and Pakistan, which Tehran said were aimed at Israeli and other terrorist targets.
And we have moved additional military resources at the president's order into the region.
Kirby said the U.S. would act to defend its interests.
And if you doubt it, take a look at what happened just a few nights ago.
All right, not just a war of words, but literally a conflict playing out in the Middle East, with the U.S. now actively involved, striking against the Yemen military in the Red Sea. Well, moving on, in a positive development, and of course something which is absolutely relevant not just to India but to the world. Taiwan's Foxconn Technology Group and India's HCL Group will form a joint venture to set up a semiconductor outsourced assembly and testing unit, also referred to as OSAT in the semiconductor world. Foxconn will invest $37.2 million for a 40% stake in the joint venture. According to a Foxconn spokesperson, the company is looking forward to jointly setting up OSAT operations in India with HCL to build an ecosystem and foster supply chain resilience for the domestic industry. All this coming again on the back of the government of India investing or outlaying as much as 76,000 crore rupees for the manufacturing of semiconductors within the shores of India, in a bid, of course, to compete with China. In a recent move to boost his second term, French President Emmanuel Macron announced a wide array of measures on Tuesday. These range from implementing regulations on children's screen time to enhancing parental leave benefits. Here's that story.
French President Emmanuel Macron on Tuesday promised to breathe new life into his second term, vowing to, quote, break taboos with a raft of measures despite his unpopularity and contested reforms. That came in a rare and lengthy news conference where Macron focused on everyday worries, schools, healthcare, and the cost of living. Without giving details, Macron also talked about tax cuts for the middle class.
Deep down, there's a blind spot in France, which means many of our compatriots earn too much to get help, but not enough to live well. It's the popular France, the middle-class France, the France that says when you offer something, it's never for me.
It seemed to be a nod to discontent over surging living costs in France that have seriously hit his popularity, as well as his prospects in the European Commission elections in June. His party badly trails behind Marine Le Pen's far-right National Rally. In his Tuesday presser, Macron blasted them as the party of, quote, easy anger. Though the president is constrained by a lack of a majority in parliament, he said he would ask his government to launch more liberal reforms to boost the economy.
Produce more, innovate more, go faster. This and independence via work and production can be done because more French people will be in the workforce.
Macron also announced several measures for parents and children, including regulating their screen time without specifying how it would be done, and that parental leave would be shorter than it is now, but better paid. His appointment last week of 34-year-old Gabriel Attal as France's youngest ever prime minister had signaled the president's desire to move forward and also win back disgruntled voters, tempted by Le Pen's far-right party.
All right, moving on to the U.S. U.S. stocks finished lower after hot December retail sales data threw cold water on hopes the Federal Reserve will kick off its rate cut campaign as early as March. Remember, the movements on Wall Street and the Fed's announcement was also closely tracked in Asia, with the Hang Seng and India's own benchmarks Nifty and Sensex also taking a beating. Here's that story.
Wall Street's main indexes closed lower on Wednesday after robust retail sales data for December further eroded expectations the Federal Reserve will begin cutting rates as soon as March. The Dow dipped 0.25%, while the S&P 500 and Nasdaq each shed more than 0.5%. Retail sales increased more than expected last month, thanks in part to steep discounts, which helped keep the economy on solid ground. That reinforced the view that the Fed may not cut rates as quickly as previously expected and sent the 10-year Treasury yield to over 4.1%, its highest level this year. Shares of rate-sensitive megacaps Alphabet, Amazon, and Nvidia all dipped between 0.5% and 1%. Shares of Tesla dropped 2% after the electric vehicle maker slashed prices of its Model Y cars in Germany a week after reducing prices for some models in China. U.S. stocks in recent weeks have relinquished some gains from a strong end to 2023, but should rebound in the second half of 2024, says Rob Sloimer, technical strategist at RBC Wealth Management.
When you look at the fourth year of the election cycle, which is the year that we're in, the first half of the year tends to be pretty choppy, really a broad trading range, but it tends to resolve to the upside as that uncertainty starts to resolve itself. Maybe a little bit different this year, but in general, what you see is equity markets are up on average 7% in the election year, with the medium up about 10%. And that's very much in line with some of our cycle work that we're looking at.
In other company news, Spirit Airlines tumbled 22%, down sharply for a second day after a U.S. judge on Tuesday blocked JetBlue from acquiring the carrier. Shares of Ford lost more than 1.5% after UBS downgraded the stock to neutral from buy. And Boeing gained more than 1% after the Federal Aviation Administration said inspections of an initial group of 737 MAX 9 airplanes had been completed.
All right, well, the Wall Street, they're taking in the cues from the economy, especially on the consumption side on account of retail sales. So let's go a little deeper into the U.S. retail sales that saw a notable surge in the month of December, in fact, surpassing initial expectations. The surge was largely driven by robust demand in motor vehicle sales and a pickup in online purchases, suggesting a solid foundation for the U.S. economy heading into the new year. Take a look.
U.S. retail sales increased more than expected in December, another sign that the economy remains strong. The upbeat report from the Commerce Department on Wednesday showed sales rose 0.6% last month. Economists polled by Reuters had forecast 0.4%. The rise in sales was led by online retailers and clothing stores. Receipts at motor vehicles and parts dealers also accelerated. Restaurants and bars, the only services component in the report, were unchanged. Economists view dining out as a key indicator of household finances. Americans have maintained a healthy pace of spending thanks to a relatively strong labor market. Data this month showed strong employment and wage gains in December, as well as a pickup in consumer prices. Wednesday's sales numbers prompted economists to upgrade their economic growth prospects for the fourth quarter, ahead of the government's first GDP estimate for the period, which is due out next week. The report also cast further doubt that the Federal Reserve would start cutting interest rates as soon as March. Still, investors expect the central bank to cut rates at some point this year, and most economists have grown more confident that the economy will avoid a recession.
All right, it seems like a bounce back for retail sales in the U.S. But moving on from the U.S. to inflation in the U.K., the annual consumer price inflation, or CPI, in the U.K. picked up for the first time in 10 months during December, following an increase in tobacco duty to 4% from more than two-year low of 3.9% recorded in November. Here's a report.
Britain's annual rate of consumer price inflation surprisingly sped up in December. The CPI rose slightly to 4% last month, above analyst forecasts and ahead of November's 3.9%. It was also the first rise in 10 months. British officials said the uptick was due to an increase in tobacco duty, which took effect in November. But there were also wider upward pressures from clothing, airfares and entertainment prices. Core inflation, which removes volatile prices, failed to go down for the first time since July. It was unchanged at 5.1% last month, above analyst projections. Finance Minister Jeremy Hunt said after the data was released that inflation didn't fall in a straight line, while the opposition Labour Party argued many families had become financially worse off during the past 14 years of Conservative-led government. Economists had expected a slight fall in inflation. The data led to a jump in sterling as investors pulled back on expectations for an interest rate cut by the Bank of England in May.
Time for a very short break here, right here on News 9 Live. But up next, Apple surging ahead, beating Samsung and giving it literally a run for its money. Back after a minute.
Ram's Ayodhya rebuilt. Ram Lala's Pran Pratishtha. Countdown to January 22nd. Dateline Ayodhya. Catch the mega coverage only on News 9 Live.
Welcome back here with World Business Report. Well, amid growing competitive pressure in the world smartphone market, Apple shipped the most smartphones of any company in 2023, overtaking Samsung, which had occupied the top spot since 2010. International Data Corporation said that according to preliminary data, Apple had shipped more than 234 million units in 2023, while Samsung had shipped more than just 226 million. Here's that story. Well, an overall slowing down of smartphone sales globally, down about 4%. But those who are buying, in fact, most of those who are buying are preferring to buy it into Apple. But let's not take Samsung too lightly just as yet. As part of its strategy to attract buyers and give competition to Apple after it topped Samsung, now Samsung Electronics has unveiled its own latest premium smartphones on Wednesday that will have multiple AI functions such as simultaneous translation of foreign language phone calls. Take a look.
Everybody's talking about generative AI, but Samsung actually started to deliver some things that I think people are going to find very interesting. You know, circle to search, which is a Google thing, first showing up on these Samsung phones, reflects the partnership that these companies have. And then the ability to do a live translation of a phone call, of a text exchange. I mean, this is the kind of sci-fi futuristic stuff people have been hoping for with AI for quite some time, but now it's finally here.
All right, staying with the technology space in a bid to maintain a substantial level of control as Tesla ventures into cutting-edge technologies. CEO Elon Musk takes to social media platform X to express that he would be uncomfortable to propel Tesla into a leadership position in artificial intelligence and robotics without having at least 25% voting control over the company. Take a look.
Tesla CEO Elon Musk says he wants about 25% voting control of the company. Otherwise, he would be uncomfortable growing the automaker into a leader in artificial intelligence and robotics. The figure is nearly double his current stake of 13%. In a post on social media, Musk said on Monday he wanted enough Tesla stock, quote, to be influential, but not so much that I can't be overturned. He added that, at 15% or lower, the 4 against ratio to override me makes a takeover by dubious interests too easy. Without that voting influence, he said, he would prefer to build AI and robotics products outside of the world's most valuable automaker. The comments marked an abrupt turn for Musk. He has long touted Tesla as an AI robotics company with its partially automated self-driving software and prototype humanoid robots. Morgan Stanley said last year Tesla's Dojo supercomputer that was being built to train AI models could power a near $600 billion surge in the company's market value. However, so far, the company makes most of its money from its electric vehicles. Governance experts and analysts said the billionaire's remarks could infringe on his duties as CEO. Tulane Law School professor Ann Lipton said it suggests he's not only turning down profitable opportunities for Tesla, but also redirecting them to his private companies. Tesla did not respond to a request for comment.
All right, no comment there from Tesla, but from Tesla to Renault, the French automaker reported a 9% increase in annual global sales volumes for 2023, returning to growth after 4 consecutive years of decline. Renault said it was poised to continue its strong performance in 2024. Take a look.
Renault has returned to growth after 4 straight years of decline. On Wednesday, the French auto giant reported annual global sales volumes rose 9% last year. The firm's namesake brand saw sales increase by close to a tenth, while shipments at its low-cost brand Dacia grew by nearly 15%. Europe was a hotspot for the firm and made up 63% of last year's sales. Electrified models also proved popular, with volumes rising 40%, slightly up from a year before. The group has dealt with years of disruption from the global health crisis and Ukraine war. Volumes dropped nearly 6% in 2022, largely due to chip shortages. The sales slump was made worse by its exit from the Russian market. To boost sales, Renault shrank its vehicle range and refocused on its most profitable markets and models. Looking ahead, the automaker said it expected the strong performance to continue through this year. Shares in the firm were down around 2% in early trades on Wednesday. Stocks in European automakers were hit after Tesla slashed prices of its Model Y electric cars in Germany.
All right, well, from the world of wheels on roads to wings in the sky and some ripped door plugs. In a latest development, Boeing has appointed a retired U.S. Navy admiral as an advisor to the CEO for enhancing quality control measures. This decision follows the grounding of the 737 MAX 9 planes due to an in-flight cabin panel blowout on an Alaska Airlines jet. Take a look.
Boeing is taking more action to reassure airlines and travellers over the safety of its aircraft. That's after a panel tore off a 737 MAX 9 in mid-air. The Alaska Airlines flight landed without major injuries, but the drama has revived concern over Boeing's top-selling plane. On Tuesday, the firm named retired Admiral Kirkland Donald as its new quality advisor. He will lead a team of outside experts in evaluating quality controls at the firm. Some analysts welcomed the news. But aviation consultant Richard Abulafia told Reuters it was odd to choose an advisor with no background in the industry. The news certainly wasn't enough to save Boeing shares, which sank another 8% or so on Tuesday. They are now down more than a fifth since the start of the year. The US Federal Aviation Administration has grounded 171 MAX jets until further notice. Besides Alaskan, the affected variant is also operated by United Airlines. Boeing has already set out other steps, including allowing airlines to conduct their own checks on the production process. But the incident has ramped up calls for management changes. Ryanair boss Michael O'Leary, one of Boeing's biggest customers, said the firm needed someone cracking heads ensuring quality.
All right, well, staying with Boeing, the company has in fact successfully conducted the inspections, and an initial group has said that 40 planes have been inspected, a key step in the ongoing efforts to lift the grounding of the aircraft mandated by US regulators following the recent incident. This significant development signals progress towards resolving safety concerns and resuming the operations of the Boeing 737 MAX 9 fleet. And moving on, U.S. Secretary of State Antony Blinken was briefly stranded in Davos after his plane experienced a critical failure related to an oxygen leak on Wednesday, following which another plane was being flown to Switzerland to pick him up. The top U.S. diplomat had traveled to Davos for the World Economic Forum on Monday and was scheduled to fly back to Washington on Wednesday. Well, that's all we have on the World Business Report, but news and updates will continue right here on News 9 Live.